So today is a session where we are going to discuss some more questions, and based on that we are going to understand some more concepts, and whatever the questions we are including in this series of the session, that all are based on the previous and memory based question. So please maintain the notes as well, because now exam is very nearby. Okay, so let's start the session. So the first question, that is based from the depreciation, and we have to just calculate the depreciation here. So the question is, a company purchased a machine, and that machine which is purchased for the 4 lakh rupees, and depreciation is charged at 10% per annum. So and at the written down method, so what depreciation will be charged on the 31st March 19? Okay, so written down method is also understand as a declining balance method, or say diminishing balance method, or say reducing balance method. So in declining balance method, or say in a written down method, depreciation rate is charged on the previous year end value. Just only one thing you have to understand, in the written down method, the interest rate, or say the depreciation rate, is charged on the previous year end value. Okay, that is previous year's end value. So if the starting value, just if starting, first you have to write here, that is starting value. So I am just telling you two ways to solve these kind of the questions in the exam. First is a just a fundamental rule, that is a starting value and the depreciation rate. Okay, that is a depreciation rate, that is a depreciation amount, and that is the year's end value, that is a year's end value. Okay, so like here, that is a year's starting value, that is a 4 lakh rupees. Okay, that is a 4 lakh rupees, and depreciation rate, which is same for every year, so that is a 10%. Look, the one thing that is important here, that the machine we purchased, that is on 1 April 2016, and depreciation we have to calculate for the 31st March 19. So this is basically how many years? That is 3 years. Okay, that means we have to calculate the depreciation for the third year, and the depreciation amount we have to calculate. So the depreciation rate, that is given 10%, and the starting value, that is given 4 lakh rupees. So the depreciated amount, that would be equal to what? That will be equal to the 40,000 rupees. I think it is fine for everyone. So after that, just subtract this 40,000 rupees in the 4 lakh rupees, and the 1 year end value, that would be equal to the 3,60,000 rupees. Now the next thing, that is 3,60,000. Now we just put the 3,60,000 here, and again the 10% is charged. And if we just calculate the 10% on this 3,60,000, so the answer, that would be equal to the, that is 36,000 rupees. And now just subtract 36,000 rupees from 3 lakh. This is for the second year we are calculating. So just subtract 36,000 from the 3,60,000, and you will just get 3,24,000 rupees. Okay. After that, for the third year, and for the third year, the year's end value, that is 3,24,000 rupees, and this would be the third year's starting value. So just write here 3,24,000 rupees, and it is again 10% charged, and the now the depreciated amount, that would be 32,400 rupees. And this is the thing that we have to find out. Look, in the question, what depreciation will be charged on the 31st March 19, we have to just tell. So the answer, that will be the 32,400 rupees. Suppose that in the question, suppose the question is like, what will be the amount of the machine of just on the 31st March 19. So we have to just subtract 32,400 from this 3,24,000 rupees, and just subtract here, so you will get 2,91,000 rupees. Okay, so for this question, the answer, that would be 32,400 rupees. So this is a very conventional way for that we just do not confuse in this kind of the question. Now understand the another way for solving these kind of the question. Look, the value that is given 4 lakh here, and we know that the 10% it would be depreciated. So that means if we are talking about for the first year, that means now our machine value would be, 1 minute, now our machine value would be the 90%. Either say it is 10% depreciated or say it is 90% value. Now the machine value that would be 4 lakh into 90%. So that would be equal to what? That would be equal to 3 lakh 60,000 rupees, isn't it? Okay. Same thing. So in this step, we do not need to just subtract. We do not need to just find out the depreciated amount. Okay. So this is a very shortcut way to solve these kind of the questions in the exam. So after that, the just 3 lakh 60,000 rupees here, and again just 90%, because appreciation is again just charged at 90%. So just again the this 3 lakh 60,000 rupees value would be at 90%, so that would be equal to the 3 lakh 24,000 rupees. Okay, so just right here. After that, because now we have to only calculate the depreciation, so we know that the value of our machine now for the third year, that would be 3 lakh 24,000 rupees, and it is depreciated with a 10%, because we have to calculate the only depreciation amount. So the answer that would be equal to the 32,400 rupees. So that would be our answer. This is how we just solve in a very shortcut way in our exam. Okay. I hope it is now clear for everyone. Now the another question that is related to bill of exchange. You know, bill of exchange. There are multiple way for asking these kind of the questions, like days of the grace are added to, and only the statement, or say only the lines are different, and where you just get confused. So that's why I including these kind of the questions in my slides. So days of the grace that are added to, we know that like in bill of exchange, usually 3 days, that is a number of days, that number of the grace days that are given for the bill of exchange, okay, for the payment. So days of grace that are added to the due date to arrive at the date of maturity. Okay, so the answer that would be for this question, days of grace are added to the due date to arrive at the date of maturity. That would be the correct. Okay. Okay, so the term maturity refers, if we are talking about the term that is maturity, that refers the date on which a bill of exchange or promissory note becomes due for payment. So the date on which a bill of exchange, or say any promissory note, that becomes due for payment. So that is known as a maturity, due for payment. Fine. So in arriving at the maturity date, 3 days known as a grace days, and must be added to the date on which the period of credit expires instrument in a paper. Okay, so the correct answer that would be the due date to arrive at the date of the maturity. I think it is now clear for everyone. Now another question that is related to like A's capital on the first of April, that is given 50,000 rupees, and drawings are given. Profit for the year given, interest on the capital is given, and we have to calculate the capital on the 31st March. Look, in these kind of the question, whenever like you have you are just given in the question, that is initial capital is given, and the final capital just asking in the question, you just understand by this. Like if A's capital on the 1st April of 20 that is given 50,000 rupees, so just write by this way, that is it is a initial capital, or say initial capital for the year, or say you can also say that would be the starting capital. Okay, either say initial or say starting capital for the year, that is for the starting of the year, that is 1st April to 2020, that would be a 50,000 rupees. So that would be a starting capital. Suppose that any person that this question is very important from the exam point of view, because terms and lines are very much confusing here, so that's why I'm explaining here. Look, suppose that this person just started a business, and suppose that he is starting the business with a capital of the 50,000 rupees. Okay, so just understand here. Suppose that this is me, and I am just starting a company with a capital of the This is my company and I'm just starting a company with a capital of the 50,000 rupees. Okay, so that would be initial capital of my company, that would be 50,000 rupees. After that, for some personal work, I just withdrew 12,000 rupees from my company. So if this would be a starting capital and if I withdrew the 12,000 rupees, so just subtract here, that is 12,000 rupees, subtract here and you will get in my company that will 38,000 rupees now capital of my company, because I just withdrew 12,000 rupees. Meanwhile, my company just earned the profit, that is 11,000 rupees. Just add here, that is 11,000 rupees, just add here. And interest on the capital also received by the company, that is 5,000 rupees. After that, just calculate this and you will get the answer here. So the answer that would be equal to the 54,000 rupees. So that would be understand as a closing capital, because we are just preparing the balance sheet on the balance sheet, while we just have to include that is closing capital. If you are saying so, closing capital, that would be 54,000 rupees, and that will be known as a closing capital for this financial year 2021. Okay, so for the financial year we have to calculate the capital. So initial capital, that is 50,000, and closing or final capital, that would be the 54,000 rupees. Okay, I hope it is clear now for everyone. Now the next question, that is a check of 2,345 that is issued by Miss Kansha was recorded in deposit column as 2,430. Sorry. A check of 2,345 issued by the Miss Akansha was recorded in deposit column as 2,435 to ascertain the balance as per the cash book of the Miss Akansha. So what we should do in the passbook, okay? Because the all the options here given for the passbook. So look what exactly happened. Exactly, it is happening that is suppose that this is Akansha's cash book. Okay, this is Akansha's cash book, and Akansha just issued a check of 2,345 rupees. So if she issued a check of 2,345, she immediately just record this transaction in her cash book. Just 1 minute. So what she does, she just immediate just debit her account with a 2,345, isn't it? So he just she just debit her account with a 2,345 rupees. But in the question, that is a check of 2,345 that is issued by the Miss Akansha was recorded in the deposit column as 2,435. That means by mistake, bank just look, just by mistake, what the bank does, bank should be debited the account of the Miss Akansha with the 2,345 rupees, but by mistake it is just credited with the 2,435 rupees. So it would be just credited like 2,435 rupees, it is credited. So now we have to just find out, or say we have to just choose the option from these multiple options, that what we have to do for just reconcile the cash book and the passbook. Okay, so the amount that should be on the debit side, the amount that should be or that should be debited from the Kancha account, but it is credited. Okay, so for getting this amount like 2,345, because it is just deposited here, so first we have to just subtract this amount, that is 2,435 rupees, and after that we have to subtract this amount also, that is 2,345 rupees. Okay, 2,345 rupees. Okay, so now just solve this, and 5 that is 10, and this would be 8, this would be 7, this would be the 4,780 rupees. So that would be the answer. Okay, so that means look, Akansha just issued a check of the 2,345 rupees. So that means that is if we are talking about the passbook balance, if we are talking about only the passbook balance, so it should be just debited from the Akansha's account, that is 2,345 rupees. It should be debited, and this would be the correct entry. But by mistake, what exactly happened that it is credited with the 2,435 rupees. So it is a wrong and it is a correct. So what first thing we have to do? First thing that we have to just we have to we have to just subtract this amount first. After that, subtract this amount, because this should be debited from the Akanksha account. So if you're talking about by this, that is 2,435. So first just subtract this, and after that subtract this, that is 2,345. So just calculate this and you will get the answer, that is 4,780 rupees should be subtracted from the balance as per the passbook. So that would be the answer. I hope it is now clear for everyone. After that, another question, that is a firm that is had cost of goods sold is given 125 lakhs and its average stock that is 25 lakhs. So the stock turnover ratio. Look, this is very direct question about the stock turnover ratio. We know that the formula of the stock turnover ratio. Anyone can tell me about the formula? Anyone can you tell me the formula of the stock turnover ratio? Multiple times I just explained this. That is stock turnover ratio, because turnover just related to our sales, and the every item that not be sold from our factory. So that's why we just calculate the cost of goods sold, and it is divided by the average inventory, or say average stock. Okay, that would be average inventory. That should be average stock. So, the cost of goods sold is already given here, that is 1 to 5 lakhs, and the average stocks, or say average inventory, that is given at 25 lakhs. So, the answer that would be what? That would be the 5 times. That would be the 5 times. So this is how we calculate these kind of the question. And in the question cost of goods sold, like in my all lectures I just included a cost of goods sold question, because in the exam you will get multiple questions based on this, because from the ratio analysis chapter you will get at least 5 to 6 questions, and that all based on direct or indirect way of from the cost of goods sold. We know that a cost of goods sold that refers to the cost of sales, and in this we just the formula I multiple times explained, that is cost of goods sold formula, that is opening stock plus purchases plus direct expenses minus uh, closing stock. Okay, another formula I just explained about the cost of goods sold. There is a minute difference between the cost of goods sold and sales, and that difference known as a gross profit. Okay, so another formula what I just explained, that is cost of goods gross profit, that would be equal to sales minus cost of goods sold. Okay, so this is another formula, and this is also very important formula for the cost of goods sold, for calculating the cost of goods sold. So stock turnover ratio, we are talking about the I always explain that in ratio analysis you just do not have to memorize every ratios formula. You only have to understand by this, that is if it is given a stock turnover ratio, that you relate with this, that is turnover basically relates to your sales. Okay, and every item from your factory cannot be sold, so that's why we just include the cost of goods sold. And because stocks that comes 2 times in a financial year, first is the opening stock and another is known as a closing stock, so that's why we just included here average stock. Sometimes in the question it is also given like opening stocks and closing stocks, then you what you have to do, you have to then just find out the average stocks by the opening stock plus closing stock, and it is divided by the 2. Okay, so because in this question the all the datas already are given, like cost of goods sold is already given 1 to 5 lakh and its average stocks are given 25 lakh. So if you have to just calculate here, just simply just put the value of the cost of goods sold 1 to 5, and it is divided by the 25. So the answer that would be the 5 times. Okay, I hope it is now clear for everyone. So okay, so that's all for this session. I hope this lecture would be very useful for you. And if you're liking our content, please do not forget to hit the like button. And if you're not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel so that you can get the notifications of the live lectures as well as the notifications of the important news that is related to your exam. Okay, so thanks for watching me here. Thanks for joining me here. Now we will meet on the tomorrow at the same time at 6:30 a.m. And best wishes for your preparation too. And just maintain the notes for every questions. Like for every concept I am explaining here, just maintain the notes because the questions I have included in this kind of the in this series of the session that all are very important. So just like this video, share this video to your friends, and thanks for joining me here.